Hey guys, it's Ronnie. It is June 30th, Tuesday, and I'm going to give you guys a market recap as well as some trade ideas going forward over the course of the next couple of days and weeks, and just an update on a couple of potential trades that I talked about on my last video. So let's go ahead and get started with the S&P 500. So you can see on the screen, this is the weekly S&P 500 chart on the right and the intraday on the left, 5 minute. So kind of circling back to the S&P 500 resistance level that it's had over the past couple of weeks, which has really been this pivot right here at 3154-ish. The purple line is also what I've been looking at as a level of resistance. So today, this week, so far, it has stayed below that purple trend line, but it's looking pretty strong today. And we'll check that out on the daily. And it's not only that, it's crossed through the trend line and actually closed above it. So whereas I was really looking for it to maintain as a level of resistance, it's really popped up quite hard today, along with the rest of the market. It started out negative and ended up quite positive today, about 1.5% again. So from that prior, we talked about this being an H pattern, and sometimes an H pattern in the market, you can see that's also higher lows, ends up being really hard to break to the downside. So it could retrace a little bit here. It went up to the 20 and actually rejected here at the 20 moving average, which has flattened out quite a bit. So let's see how the 20 moving average holds up tomorrow. It did pierce through it, so we still could technically get up to this 3154 area and potentially reject from there. So this is what we're looking at as kind of the line in the sand. And then, honestly, this 3181 area could also be a potential area of resistance, although I would prefer that it stay under this 3150 area for, any potential thoughts of a short, which I have been looking at some to potentially short some ETFs and stocks based on kind of the action in the market. So that's kind of what I would be looking at for a line in the sand myself. If it crosses above that, we'll look for a push above this longer-term trend line, from the prior high, and look to potentially even go long over this if it gets above this. But like I said, we go with the flow in the market and what the market gives us. Of course, I would prefer it to stay below here. That would make a really good case on the weekly of that level being an area of pretty strong resistance. It's popped up twice in the past 3 weeks to that level and has rejected. So, you can see also the candles here lining up, and they have a similar sized bodies. So that is actually, an area of congestion chop, but it could also potentially be a continuation depending on what this week's bar does. That is also complicated today with the end of the quarter being today, June 30th. So we'll see what the rest of the week brings. So we'll keep an eye. We have this trend line that we actually got below. It's a very short-term trend line. However, it's not really acting great. It did cross below it right here, but it's also crossed back above it, crossed above the purple trend line. So we'll see, where we are in the next couple of days through the end of the week and kind of decide on things from there. Right now, it's just a lot of choppy action with the volatility the way it is. So, it is what it is at this moment. And really, we need to do our part and just wait and watch and see where things settle out before we make new, medium to long-term trades. All right, so that's the S&P 500. I talked about also potentially the XLF, potentially shorting the XLF. I knew it would probably bounce from here, and so I was going to wait because I kind of missed this trade short. However, I'm actually kind of glad I did because you can see it bounced on this really long-term trend line from 2009, as well as this kind of shorter-term uptrend from the March uh, bottom, the COVID bottom right there. So, I mean, it could potentially bounce. You see, it's kind of come to this trend line a couple of times. And from the last time it came here, it bounced really high all the way up to the 200-day moving average. So we'll see what happens here. I'll be looking for probably a little bit more upside, maybe. If it doesn't, then I'll be, of course, looking to short it below that prior low right here. So if it does get below this prior low, I'll be looking to short the XLF. I'd prefer for it to go up at least to the 20 moving average and roll over, um, and then I would short it, at that point, and give me a little bit better price. But we'll have to go with whatever the action does. So I'm still watching XLF. NVDA really went the wrong way today. I still have my one put in NVIDIA, but it did come up right to that trend line, that red trend line that we've been talking about, and rejected from there pretty hard. You can see this action right here on the left side on the intraday chart. But I mean, it meandered its way back up there in the later part of the day. Um, and so you can see it had a really strong move towards the end of the day yesterday, kind of consolidated overnight, and just along with the market today, by the way, just ripped higher um, off the open. I don't think there was any news. Let's see. I actually didn't check on this. No, there was really um, no real news on it either. It was probably just along with the broader market um, and semiconductors in general. We talked about Micron yesterday, so why don't we go into that? So Micron had earnings, and I think probably with Micron's pop this morning, a lot of the semiconductor stocks did also pop. So with Micron, we actually talked about this potentially being a trade today off the open, depending on what the action was. So I actually did say off the open, you could potentially see if it stayed above this descending trend line here. There may have been the potential for it to continue the up move up to this pivot right here, the prior high. But it actually didn't do much at all this morning. It chopped around quite a bit. So if you look at the 5-minute chart, you can see how choppy it was this morning, which really was a indication to me to kind of stay away from it. So you see it kind of pierced that trend line. Didn't close below it though. So first 5-minute bar did not close below the trend line. It pierced it and started going back up and kind of faked you out. It went above that first 5-minute bar, but did not cross above the overnight high of 52.85, which is another indication that it was kind of a weak move. Because you'd like to see it at least get above the overnight high before getting into a big position. So really choppy. It tried to make a move, off of it came back down to the trend line and bounced again. Um, Made a move up there to about 52.20, but then the rest of the day, you can see it just chopped around. It went up, then came all the way back down, went below it, kind of held at this 200 moving average on the 5-minute chart, and then ended up kind of creating a little cup pattern here towards the latter part of the day, and ended up closing, you know, um, still up, obviously, from the prior day. It did gap up, but it closed above this trend line. So, pretty choppy day. I didn't take a trade in Micron because it was so choppy. And didn't make it up above, the prior day high, or did not maintain too far below this trend line. And I don't really like to trade earnings trades past about 10:30 in the morning. So this was really the beginning part of the day where I usually trade earnings plays, and so I did not actually get into any short move on it, which as it crossed back below this trend line. I mean, I guess you could have had a really brief short here from 51.36 down here about 51.15, but I didn't take any trade on it because I don't usually trade earnings in the latter part of the day. So Micron was kind of a bust on a trade, which was disappointing but it was, I guess, it did gap up about 5%, so it was a pretty big move. But I'm guessing that's why some of the semiconductor stocks were up today as well. So we also talked about FedEx, and I was actually wrong about the earnings time frame on FedEx. I thought it was going to be pre-market, but it was actually aftermarket today. So you can see, and we had two scenarios. So we'll talk about FedEx now that we see the action it's had after hours in the sense of a long trade. So it has come up quite a bit, $13 actually, almost to our target here in the after hours. So we talked about yesterday the if it does pop up, it has the potential of popping up yeah, up about 13, 14, $15 potentially to this uh, um, trend line here, which is a longer term trend line. Or you can see there's a little gap here, which actually I missed yesterday. It starts around 157.90, so I'll go ahead and add that pivot there. And also, what I noticed yesterday was this kind of slanting, um, lower highs here, where I've kind of drawn a crude trend line to the downside from that area. So if you extend that trend line out, it gives you another target. So if I were to kind of estimate where that was on the daily chart, it could be about around 150. Like if it were today, it'd be around 156.18 in that area, and that's just shy of where it is now. So you can see right here on the left side exactly where that is. Excuse me, on the intraday. So you have a couple options here for tomorrow. So if FedEx maintains kind of this range here above this prior high, which is what this 150.19 is, this prior high here. If it maintains above that, I would potentially look for a further upside um, and a push through this 156 level. Oh, excuse me. So I'd be looking for a push above this 156 level, and then um, potentially into this gap. So 157.90. These are all targets also to the upside. So if we were to stay here and it opened in the morning, crossed over 153.50, which is the overnight high so far, I would look for a pop up to this 156 area as my first target, then 157.90 as my second target. And if it got through that, um, we'd be looking for it to continue either to this gap fill here, which is around 161.80, or potentially up to the 164 area, which is this longer term trend line from 2009. So you have some pivots to the upside in FedEx. It reported extremely good earnings, by the way. So we talked about if it was weak, what we could potentially see, but it had some very strong earnings, far exceeding the expectations. So really, you could see a push, even if it's a first swing trade over the couple of days, up to this trend line. You do have some resistance there and a lot of congestion. You can see back here in this area from last year where it kind of chopped around. So these are some. This is a significant area of congestion. So I would assume it to still be an area of resistance for the stock. And if it got up there, it would be retracing all of the COVID crash. Um, so that's, I mean, for FedEx, that would be pretty bullish proposition there. So that's FedEx and a potential earnings trade for tomorrow. UPS also kind of in sympathy has gone up. I'll just show you that chart real quick. Again, UPS has a really big area of congestion here to the left prior to the COVID crash. So you could look for, some areas. Let's say it stays above this 113 area here. This is like a little gap actually. So really the 115 area. I mean, it has the potential to get all the way up to this descending trend line here. Um, but again, it has this big area of congestion. And with it not really reporting earnings, it's not really the best trade. But I did want to point it out because it had a really big sympathy move. It could actually um, lose some of that traction tomorrow because it really was off of FedEx's earnings. And UPS reports earnings on the 22nd of July. So a long way to go there. So, I mean, it has popped up pretty hard you could potentially expect a retracement back down to the 115 area, or even all the way back down to this 113 area gap. I'll be looking to see what UPS does in the morning, but I usually am not going to take a trade on that um, unless it's kind of to the short side to kind of um, fill that gap. So that's FedEx. Looks like it's still moving up in the after hours, so pretty bullish. Outside of that, we'll just quickly go over gold. Still looking great. Actually, had a really good move today. Um, I mean, strong move in the sense that it looked weak initially, and you can see it kind of popped. This is today's bar, this green bar actually. This is after hours. So it popped up and closed above that prior high. You see, we had thought this potentially could be a double top, but since it pierced the pivot, it has continued up and has closed above this pivot, which is really bullish. So I am still looking for gold to go much higher in the long term. I still have a long-term position in gold. Next target would be this 1886 area, and then potentially this longer-term trend line to the upside. So, I mean, obviously it has a lot to go through along the way, but if we're looking at a measured move here, 1920, you know, that over the course of the next several days and weeks, it could push all the way up to this area. So I am still long gold and will be holding it for the medium term anyway. Along with that, we've got bonds that we've been going through every day as well. Bonds have been kind of weak today. Um, kind of like what I was talking about potentially the it going over it. It went over this 50 moving average here, and crossed above this pivot here. This last high 178.27. Today it's actually come back down. So let's check the weekly out on this and see how it's acting on a weekly chart. So yeah, so you see it actually did push above that area and close above that pivot, but today it's kind of weakened back a little bit. It hasn't yet, you know, it hasn't yet closed below this prior week's bar or body even, so it still could be just a little retracement before going back up. So I'll look for some support around this 20 moving average on the weekly chart. That would give me, or even this pivot right here, 177.07. If it can stay above that and start to crawl back up, I'll be looking to get back into it. But it could easily come right back down. So I'm really glad actually that I didn't get in that position. Um, just for the sense of price, getting in at a right price, like where you enter a position is so important. So it did have that rounded top kind of consolidation area, which is usually a bearish sign, which it did fall quite a bit, but has bounced since then. So let's keep an eye on bonds. Did have pretty weak move today. And granted, the market was up, and I think that the dollar. Oops, that's not it. Checking the dollar real quick. Um, yeah, it actually. I mean, it was down today as well. So dollar's kind of been in a bearish flag formation here. Weakening dollar was pushing up, can push up the price of stocks. So the stock market has, was up today, and bonds were down, which sometimes are correlated to that. I also wanted to point out silver because I've been holding a silver position, physical silver position, for a little while, and transitioning that into a virtual silver position. I've been waiting for the right price, and we've been talking about silver pushing up above this 1891 uh, area. So it's making its move. It's crossed back above this trend line, um, and it's making its this week, and it's making its move towards this 1891 area. So I'm really looking to get back into silver as soon as it crosses above this area of resistance, and pushes up above to 1975 and beyond. I mean, in the long term, I mean, let's show the monthly. Silver is actually quite bullish long term. So if you take a look here, these are prior highs, last of which was, around 2009. And if you look, zoom in a little bit here, if you zoom in, from there, it's actually kind of based. It's been basing here. It did make a kind of a spike low there during the COVID crash, which isn't the greatest. But if you take a look at it just uh, at that 14 level, with the 14 level being kind of a low point there of this base, it could, as it crosses back over this $19 level, form the right side of this big cup here. So you see this giant pattern on the monthly. Um, you've got this spike high up here at 2009. It's retracement back down to almost 14, and then finally down to like 10, $11. And if it gets back up above this 1975, and then of course above 21, we could see much higher highs. I mean, you've got, of course, this area of consolidation here that, uh, right here, that could potentially be an area of resistance. But still, that is a long way up. We have some pivots along the way on the monthly chart that we could keep an eye on, but really not too much after you get up above 21 until you hit 25. So I'm looking for silver to be, um, you know, providing some continued opportunities for buying. I mean, honestly, it could come back down and then make its way up. So that's what I'm looking for, and that's why I'm looking at that level right here of 1891 in silver, and then 1973-ish. So looking for a break here in silver, and we'll just, again, we have to watch and wait and be patient on that. Outside of gold, silver, and bonds, I will just talk about Apple for a second. It's had some bad news, um, over the course of the past several weeks, actually, with with regards to the iPhone and 5G and stores closing. But it continues to show a lot of strength. And what I had talked about a week ago or so is reshorting Apple. I had originally thought of this purple line as kind of an area of resistance, but it did pop above that line, and it started to come back down. But then you can see it showed some strength again and has now gone back above it and is pushing higher. So I had mentioned that I wasn't really thinking about shorting Apple again until it got below this area of congestion here, this area. So it hasn't made it down there. The 20 is still well above the 20 moving average on the daily. So no, it's like a no touch for me right now until it gets back below probably 346 to the short side. I mean, it looks like it's a really good long, which is kind of crazy with the valuation where it is right now, but um, it is what it is, and this is why you have to have like defined entry and exit points for your trades because had I got in it right when it went down below this purple trend line again and closed there actually, which is pretty bearish, I would have been in a little bit of trouble considering it just you know ripped up from there. So um, that's Apple, and I just thinking if there's anything else that we needed to talk about today. I think that was the last um, trade I wanted to talk about outside of silver. So with that, I'll go ahead and end for the evening. Thanks for joining as always. Have a great evening and happy trading.